Hello, folks. Welcome to Market Trends. It's David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone today. I'm start off with a few disclosures as usual. I'm going to share a few important links in the chat as well. Okay, those are in the chat. So remember now, you can go to tradestation.com and right kind of toward the bottom of the homepage, you're going to see today's rundown. It's an article with the title of today's webinar. I'll show you that. Get some key information. So first, let me show you some standardized returns, some of the ETFs we're going to talk about. You see them here. Now, if you go to tradestation.com, go down the page a little, you'll see this article. Has Scott Bessent taken charge? And I think it's kind of the overall kind of theme of what's happening right now. So the overall kind of view that may be kind of emerging, and the one way to look at the market now is that in some ways we have something potentially of a grace period at this moment in time. There are certain indications that sentiment is now kind of recovering for a period of time. So the first thing that jumps out to me, now remember, if you go to the top here, there's a link to these downloads. And in the downloads, you will get a series of indicators that you can load into your TradeStation platform. And after that, you can load this workspace, which we're showing here. And on this workspace, it's important to kind of look at some of the different tabs. Standardized returns is ones we're showing you first. But let's go to key ETFs, and in particular, let's go over here to the sector funds. And if you actually look today, for example, you can see that technology, industrials are leading. But like look in the last week, for example, technology, consumer discretionary, and communications. So the last trailing 5 days, we now see that the big three, as I kind of call them, these are the mega cap sectors. These are the ones that tend to actually tell you what direction the market's going to go. And when these are lagging, the market's usually bearish. So on a year-to-date basis, they've been lagging because the market's bearish year to date. And it's interesting to kind of, and they started turning negative, as the market was starting to sell off. And now it's just the opposite. So we're seeing in the last week that our mega cap groups are leading. We're seeing in the last week that growth is leading. We're seeing in the last week that semiconductors are leading. Software is leading. We're also seeing that gold miners, which had been the leaders on a year-to-date basis, are down in the last week. We can see that the safe havens, let's even look on the basis of today, consumer staples, utilities, real estate, all lagging. So this is now telling us, one of the great things about TradeStation is that we have this ability with Radar Screen to see so many kinds of granularity in the market. And what we can really see here is that this sector mix is giving us more of a kind of positive picture. So my view now essentially is in some ways that the market has a grace period when the overall sentiment is kind of thinking we're going to give the administration the benefit of the doubt for now. And it makes sense that it would happen now because we're in the thick of earnings season. Speaking of that, let me just quickly remind you that in this workspace we have here, this is MT main. Most of the things we're doing are in MT main. If you go over to earnings dates, it's one of the tabs, you can import, for example, the NASDAQ 100. And you can prepare for earnings. We did an a webinar yesterday showing people option strategies for earnings season, and part of it was essentially using the same functionality, which is to be able to bring in a list of stocks and then have the earnings calendar populate here. I always like to mix it with options volume so I can actually see the names that are really active, that trade several 100,000 contracts a day, and that can be good for doing option strategies. You might want to check that out. But I want to get back over here just quickly so you see. I want to just remind you guys that this is part of the workspace. We have the earnings date tab in the MT main workspace. All right, now get back to quickly here to key ETFs, and I think one of the things here that was most interesting, like I said, well, anyway, we have earnings season coming up. So what do we have now? We basically have a whole lot of negativity from tariffs priced in. Everyone kind of knows these things, and now there are significant kind of sense of things kind of turning. We're going to get to in a minute, but I wanted to just kind of mention that. So I think right now we're in a spot where the market technicals and the kind of news events give us a potential grace period of time when people might give the market the benefit of the doubt and the selling can subside. Negativity remains extremely high, over 50% on AAII. The different surveys are extremely negative here. So it creates a certain potential for you know a for a certain extent of a turn of sentiment. And I think it's important to kind of realize that's the context we're in. And it's also important to realize that when you look here at radar screen, that it is kind of confirming it by showing that the big names XLK, XLY, XLC are leading now on a trailing 5-day basis. We're seeing weakness in the safe havens. Um, so there's also a pattern that is popping up on a lot of charts that I did want to mention. And it's essentially this kind of falling trend line. Like it's really visible on Tesla, but it's on several other charts as well. So right now, if you actually look, you can see that several of the large growth things, and more than just even growth, but several of your kind of large names have all right. This line is all over the place. If you look, it's on many different charts. And it does create the potential here for things that kind of, hold and break to the upside, kind of go back and probe up towards some of these levels. And I just think we have to realize that this is something that when you consider how negative things are, this creates some kind of potential for a turn to the upside. I want to just stick with the S&P briefly to show you a few other things. What's interesting to me is the 10-day simple moving average. I'm the only person I know who uses it, but I have found it useful. And what's interesting here is that if you even look down here, it was rising as the market went down that on Monday. And then it was already rising. And that's a very interesting pattern. I've just noticed that the direction of the 10-day simple moving average can be a very powerful sort of short-term trend indicator. So it is just sometimes it can really work. There's been a volatile market. But here's the key things that stood out to me. On Monday, when we did State of the Market, we said if we held 5,100, that there could be a push to the upside. And what's interesting is there was buzz going on at the time that there was going to be a relief on some of the tariff stuff and some of the stuff with Powell. So apparently Scott Bessent was out telling people about this on Tuesday of this week. But there was a certain kind of sense that things might try to that the conditions might improve. So what's important is this level 5,100 was the support from back here in August. Then if you look, let's zoom in on this big rally day on April 9th, this huge rally, and then look at the low right around 5,100 on April 10th, and then look down, we came down and held it. So this now has emerged as an important level. This is the thing when the market is so kind of volatile, a level might suddenly appear that you didn't really necessarily think was going to be as important, but it has. So it turned there. So now we have something else happening. We're basically trying to turn the 21-day exponential moving average higher. So now actually, it looks to me possible that for the first time, really, since this selling began, maybe if we might actually be turning that 21-day exponential to the upside. That would be also something. MACD turning here. So from my perspective here, there are some indications here that the short term sort of direction has turned more to the upside and people could have a little bit of the benefit of the doubt. We also have something like the 50-day moving average coming down that people might say we need to test that. If I want to get short, I'll be selling the 50, but we're not there yet, so to speak. So people might be kind of thinking, I want to get short again, but not yet. It's maybe we need to test one of these. Maybe people are going to look for some tests back up into this 56 to 5,700 range. Those are some levels back here. We have these levels going back to November and January up in that same range. There were, these were support back here. They were resistance up here, and people looking to do some selling might be thinking that we need to go higher up into that area. Another thing that is interesting is well, first of all, we're actually just forming right now as we speak a bullish outside week. So on this workspace, um, if you actually look on our weekly chart, you can actually see that this is a bullish outside week. You can see very clearly the lower low and the higher high. That is a bullish reversal pattern. So from my perspective, this also might be kind of suggesting that the sellers at this point have been sidelined. Maybe they're off with Peter Navarro. Anyway, DXY also is interesting. I want to just quickly mention the dollar index. Has been all this talk about selling the dollar or selling America and all that. And we were actually some of the early kind of people mentioning it. We were very, you know, we're very early in noticing this completely bizarre and ahistorical sell-off in the DXY. We talked about it at the time in March. We talked about the potential for capital flight, and then it became a mainstream talking point in the following weeks. But then we also have to realize that we're talking about a pretty huge, kind of, man bites dog, so to speak. We're talking about something which is a historical aberration. And, it's nice to talk about these big philosophical things, but they don't always actually really last. And it could be something where at this point we've priced in significant dislocation of American assets. We've talked about it a lot, and thinking that something like that is going to continue might actually be a little bit extreme. So I think right now we're at a spot where the dollar has come down toward these levels, and yes, you can say all these levels down here, maybe the dollar does need to sell off further, and that all can be a potential argument. But the point is that at this moment in time, it also could be a situation where people say this is crazy, it's overdone, and then you actually get a reversal, you get some kind of mean reversion in this. So I think it's important to realize that people have really pushed hard one way on this narrative, and if the world doesn't end and the United States manages to somehow, not become a total disaster, then people could be saying that this is an opportunity to be taking the other side of this trend. So this is a big historical interesting trend, but it's priced in a lot of extreme sort of views that may not last. At least if they do return, and you can argue the United States is going to lose some of its position in the world and blah blah blah. You can make all those points. The point is that earnings season is on us, and there's other things coming. And maybe, just maybe, if that sell America trade is going to come back, maybe it comes back in a few months. Maybe it comes back after we test the 50-day moving average on the S&P. Maybe it comes back after earnings season. So I think that's another way to think about it. The other thing to remember is that the European Central Bank is extremely dovish, and that also is something that might argue against continued downside in the US dollar. Now, let's take a look over here at the actual rundown we have, because what is interesting is that if you go back to the 9th, that's when Scott Bessent basically, was able to get Trump to just delay those tariffs, which I believe goes until July 8th. But it's also interesting we're talking about July, because the thing is that we have Bessent. There's an article in The Hill that said Bessent is targeting July 4th to get the tax cuts done. So now the thing is that we could actually see a scenario here where, everyone was expecting these tax cuts and deregulation and all these things that were supposed to be good, that Trump was going to do. And instead he came in with these tariffs and caused this huge sell-off in the market. But the thing is that other narrative might come back. So what do we have now in front of us for the next 2 to 3 months? We have earnings season. We have Scott Bessent saying that China escalations are going to de-escalate. We have Trump saying that China tariffs will come down. Okay, so that's now some potential that might happen, that we have people actually saying it. And then we also have this idea of tax cuts happening by early July. So you put all those pieces together, and people actually have that potential to maybe look out and see a brighter future. Now, I think it's important to realize that the market will price things in before they happen. It will say, for example, this is now what the overall kind of consensus shifts towards. We can have a rebound up toward those levels. And then when, there is, when Trump lifts the tariffs, or when the tax cuts pass, that's when people sell it. Maybe it's buy the rumor, sell the news. And you just have to realize that that is the way the market behaves. And right now, the 10-day moving average is turning higher, MACD is turning higher, and there are some other indicators. In fact, let me also quickly now go to some of these other charts I want to share with you. First of all, MT breadth is one of the workspaces we share with you guys. There's a few really interesting things here. One of them is the advanced decline line is actually showing a very strong improvement. We've seen some real signs of improving breadth for a while here. This is something I think that is interesting. And the other thing is, look at the blue line. This shows the stocks above the 20-day above their 20-day moving averages. And what you can see is you can see a very dramatic sort of spike. So usually when this sort of thing happens, the VIX goes down and the market, the volatility actually fades. When a bunch of stocks jump above their 20-day moving average and this line goes higher, it's usually associated with lower volatility and not exactly the market going up. What you could actually see is you could see the market not move a lot. It could move up a little, it could grind up, but then individual names take off. The individual fast moving tech stocks that people like, things like Palantir, and we did a trading view idea on that one today, or some of these other names. If you look, remember, we do share our trading view ideas here. We're going to get to some of those, but these are some of the names that maybe people look for, the smaller, more active, higher beta technology stocks to start to move. And with earnings season coming, that is another thing to think about. But I did want to just mention that this rise in the stocks above the 20-day moving average, which is what this blue line shows us, is usually associated with better sentiment, lower volatility, and more kind of individual stocks outperforming the kind of higher beta individual risk on sort of assets. So you see the improving breadth, and you see this number as well. Now, let's also jump over to this other workspace we've been sharing with you guys recently, our MTES version 2, as I call it. Remember, there used to be one that had 2 charts. This one has 4. Now, what this is this, I added these 2 charts on the left. And on this one, this is now the hourly candles of the cash index. We added the 10-day moving average. It's basically a moving average designed to simulate the 10-day on the daily, but it's on the hourly. So it actually has a period of 70. It's basically the 70-hour moving average on the cash index, which is important to realize, because if you use futures, then you have more hours in a day. So then the moving averages work differently. So just realize it's a set up a very specific way. But you can also see here the way this 10-day is moving higher. This one is also on a 4-hour chart of the S&P futures. It's designed to show the same moving average, and you can see how this has been kind of turning higher. So these are interesting. Now, also up here, this was basically the day after the tariffs were announced on April 3rd. Look at this. I mean, on April 2nd, they were announced, and the gap down on April 3rd. But look at this gap. So I think it's interesting to realize here is that we've basically had, you can see this level around 5,100 we talked about earlier. But I think it's important to realize that what we have is, you can see how it made this higher low that got confirmed. And then what's interesting is that you basically have um, the um, the gap here that people might look for this to go up and fill. And now that we're above the 10-day and it's rising. Now down here in this chart, this is the one that has our hourly on the futures. And what's interesting about this one is that you can see how the 50-hour moving average. Look at how when we dropped under it last week, we got continuation to the downside. And then as we got back above it, look at how we gapped higher. And we just sat there basically on the 22nd, all of the 23rd. And then today, this morning at like 5 in the morning Eastern, we had a little drop down to the rising 50-hour. So what does this tell us? The 50-hour is rising. So this line was solid green, which is the average rate of change of the 50-hour moving average over the last, I think, 10 hours it's set. And what this shows is when the red line is rising consistently, this line down here will be a solid green. And then when it's falling, you see the opposite. But what's interesting is the signal that we've talked about many times on this webinar is that when stochastic goes oversold and this line is positive, solid green, that is a potential signal on the long side. And that also gave a signal this morning. And I wanted to just kind of point that out. So this chart remains relevant, and it's built into the zip file that it's at the top of this. That's at the top of all of our market trends webinars. If you want to check those out. Okay. So I mentioned these things about Scott Bessent. So right now we have July 4th. We also have earnings season, as I mentioned here. Here's our earnings dates. These are the big names coming up. You can see here that we've got Intel and Alphabet this afternoon. Now I'm sorting by average options volume, which are going to show the most active. We also can see here, if we go out a little bit more, see this just lights up when it's coming in the next 5 days. We have Starbucks. We have some other names here. I'm going to now sort it by days, and you can just kind of see all the companies reporting, kind of over the next kind of through the end of next week. I'm going to go down here and I'm going to go to data, add label row, and everything above this label row are going to be reporting before the end of next week. Now I can sort by average options volume and see the big names. We have MicroStrategy, Meta, Intel, Alphabet, Apple. These are all reporting before the end of next week. And these are the catalysts that are coming out. And then, like I said, July 4th, we have the hope of some kind of thing with the tax cuts. But don't forget also, we do have the potential for a Fed rate cut in June. The markets continue to price in about a 60% chance of the Fed cutting at the June meeting. So now as you kind of look out into the future, it is easier, or at least more plausible, for people to say, you know what, things might not be as terrible and there might be the potential for things to kind of swing the other way. And I think, as we showed, the things like the breadth on the S&P, the 10-day moving average, these different patterns, the sector mix are actually kind of confirming that. There is signs of stabilization in the bond market. TNX here on this trading view chart, the 10-year, we had talked about this way that it kind of held this basing pattern, but it's at a spot now where it's completely kind of neutral in my view. I mean, there is this kind of nightmare scenario that yields go to 6 or 7% because the United States has too much debt. You can make that scenario, and maybe it'll be true at some point in time. But the point is that it's also possible that they'll pass a tax cut, the Fed will cut rates. And the other thing that's out there is that yesterday, oil had some very bearish news. Um, OPEC is just completely going to flood the world with oil. And this is what we were talking about some time ago about oil, is it basically, OPEC has, now a long time ago, it's funny. Anyway, I was talking to a guy who did construction in New York, and he said they're going to build a stadium, and they're going to build it in Brooklyn, or they're going to build it on the west side. And I think they ended up building it in Brooklyn. And the reason is he was in one of the unions, and he basically said that promises have been made, and there's basically commitments to get this done. Well, I think inside of OPEC, something similar was basically happening with the Nigerians and some of these other people. There was pressure inside of OPEC that, I'll tell you, when they're like, when we get out of COVID, we get to this point in time, they told the Saudis, like, we cut production to keep the world going during COVID or whatever, to keep prices above, zero or whatever. But we're only going to do this for so long, and then there are promises, and there is basically a debt these guys have got to pay back, and they've got to let these other countries increase production. And if you look on Reuters yesterday, just out of the blue, OPEC could increase production. And I'll tell you, when Reuters reports something from OPEC sources, it's almost always, in my experience, accurate. They are talking directly to, like, the oil ministers of these countries. They don't get this story wrong. So the world is looking out now and seeing the potential, I think, of more OPEC oil on the market. And at the same time that we have all this trade war stuff, I think when we look right now, I'm not going to say oil necessarily goes that much lower, but I think we have to realize is that out there in the world, there is a desire among producers to be pumping more oil for whatever reason, and that keeps a downward pressure on prices. And we have to realize here, we have a certain, very positive environment that could happen on the macroeconomic level. We have the base effect that can trickle through and cause lower inflation. We have these disinflationary forces that want to happen, with rents coming down, shelter prices coming down. These things in the data wants to actually see inflation go lower because there's so much evidence of house prices coming down and things like that. There's so much potential that if we get interest rates low enough that we can start really doing volume of home sales, prices are going to come down and rents are going to come down, and inflation, there is the real potential out there for it moderating. Then you throw on top of that OPEC flooding the world with oil. There could be a scenario here where, you know what, the 10-year doesn't go higher. It stalls and maybe goes back under 4%. And that could happen. And I don't want to be overly negative. I mean, there is the argument the United States has 6-7% debt, GDP, what do you call it? Deficit to GDP. Our debt is getting out of control. And you saw this recent blow up with, and these things are all potential risks that are out there, and no one should, I think, ignore them. But at the same time, there is an argument here with, the global economy slower and all these oil things. Like I'm saying, there's a real potential here that things go the other way. There are real positives. There were reasons why coming into this year people were very bullish, and one of the main reasons is that there is that macro catalyst of lower inflation, that if the tariff thing doesn't get out of hand, that narrative of disinflationary pressures and lower rates and more rate cuts, it can come back as a narrative and as a catalyst, and it can be very forceful and powerful. So I want to just emphasize that. Now, as we also look, I think it was yesterday, more than maybe 10, 15 states now are suing the administration over these tariffs. Like I said on State of the Market on Monday, I said that basically there are tariff headlines coming from at least two places. One of them is going to be the Trump administration saying, "Oh, we struck a deal with Japan or Zimbabwe or who knows what." They're going to say this and blah blah blah. So one thing is you could have Trump, you could have Bessent or one of these other guys make statements on social or like at a dinner with investors, like it seems like Bessent did. That's one possibility. But at some point, and it could be relatively soon, there very well could, and I will never predict something like this. We just have to realize there could be some kind of injunction or there could be some kind of ruling from the court. And it might not be really even like, oh, the court just says tariffs are bad or we're going to block them. It could be like, we agree to hear these cases on an accelerated schedule. And that might be viewed by the market as meaning they're going to overturn the tariffs. Or they might say, we're not going to hear the cases at all. And that might mean that the tariffs stay. But the fact is that we need to realize now is that there are these other forces. These are not normal forces, but it seems probable that there will be some kind of legal / Supreme Court, some kind of federal judiciary ruling on these tariffs is probably coming. Now we have somewhere between 15 and 20 states that are suing in various ways, plus some other trade groups. So this is likely coming. So I want to kind of mention that. Now, there's a few other things popping. I mentioned thing about OPEC, and it is pretty interesting. I was really surprised to have seen that. But anyway, it is interesting. And as we look now, I think today was very interesting because if we look over at some of the big movers, what we can see is that Texas Instruments was just stellar. It was a really strong quarter, and the thing is so is Lamb Research. These are these are kind of like the workhorse kind of chips, and a lot of these names have been very strong here. So I think it's important to realize that if the semiconductors have taken a beating, and if they come back, that is something that could be also a powerful sort of thing for the bulls. So we had some good news from chips, and we had some good news from ServiceNow, and ServiceNow has been one of those kind of workhorses. In my view, they're one of the more important companies. They're not as glamorous as like, Facebook or Palantir, but they're a workhorse of technology, and they actually show where the demand and things are happening. And so very strong earnings from these companies this actually creates an environment here where we could see tech come through and all these horrible worst case scenarios don't pan out. And I think that's what the market is seeing. So speaking of that, like I said, Alphabet reports after the bell, a lot of negativity and fear that basically with less trade with China, that they're going to lose Temu and the Shine and all these but these are advertisers are going to hit Meta. It's going to hit Alphabet. However, again, lots of bad news is now priced in. and the wall of worry can start to kind of take effect. Um, Also, it was interesting that today there was some kind of article from there was CNBC did an article not that long ago saying that basically Amazon and Nvidia have both come through and somehow made a statement that data center demand is not slowing down. So I just want to point those out as something where so we've had these earnings from Lam Research, from ServiceNow, from Texas Instruments showing that. We have the article on CNBC of Amazon and Nvidia saying AI demand is not slowing down. So these are just out there. I want to end by just pointing out a few of the really quick things. Hasbro, kind of a crazy stock, but they seem to have some kind of turnaround story happening. You might want to look into that. Uber, I think, is a very interesting name because Uber never made, look at how it held above its December lows. It's very similar to a stock here like Palantir, which we did a trading view idea on, where basically it held above the recent lows. I mean, it held above its lows from like December. And look at how it broke this line. We did a trading view idea on it clearing that high at 99, where it was basically all the way back from late February. So these are interesting to kind of see how these stocks did not pull back nearly as much. They stayed above like their 100-day moving averages and stuff, unlike the broader market. That's interesting. Now we also have, that was Uber. I want to mention Airbnb is also in an interesting spot. Now here I said before these falling trend lines. I wanted to point out, like like we saw in Tesla. Look at this. I mean, you've got that line. Like a lot of these lines. Another name that we've talked about from time to time is Reddit. This is a company that, it's kind of interesting. It had this big earnings gap. It basically gave back that entire move. And this is one also where the earnings are coming in early May. But this is also a name that has emerged. I mean, this is a company, I mean, I never predict something like this, but it's not bonkers crazy to think a stock like this could one day be in the S&P 500. And so these are the sort of things where 5 years from now, if you can kind of project into the future, I mean, is Reddit going to be a bigger or smaller company? I mean, you can just have your own thoughts on that, but it does seem to be in a potential sort of like that the early stages uh, of that solid growth. It's like it's an established company, but it's not Facebook yet. So the thing is that when you have these kind of companies that go from being mid cap growth companies to large cap growth companies, that's often where the most dramatic outperformance can happen. I want to point that out in Reddit. Another one that's very interesting to me was Monday. Is that basically this is like a software company for workflow management stuff. And what's interesting about this is, look at this. This one also has, there we go. All right. You can see that trend line. Again, earnings report that was strong. So these patterns are popping up. Also, if you look at it, it really didn't go back. I mean, look, the stock has really gone nowhere here for like, almost a year. So this is the sort of thing where a name like this might extend. So these are some things I wanted to kind of show you that were somewhat interesting to me that were jumping out. We will be back on Monday on state of the market. That's when we look at the sectors and things like that. So hope everyone has a great day. Don't forget about the upcoming earnings and the ways you can track them on TradeStation's award-winning platform. Hope everyone has a great weekend. I'll see you on Monday.